Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2025, and we're diving into TELA Bio's latest earnings report for the third quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. TELA Bio is a fascinating company in the medical technology space, and their recent report provides some intriguing insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. TELA Bio reported a revenue of $20.7 million for Q3 2025, marking a 9% increase from the same period last year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by the addition of new customers, increased international sales, and the U.S. launch of larger-sized OviTex PRS configurations. However, this was slightly offset by a decrease in average selling prices for hernia products due to a shift in product mix.
Despite the revenue increase, TELA Bio reported a net loss of $8.6 million. How does this compare to last year?
That's right. The net loss has narrowed from $10.4 million in the same quarter last year. This improvement is largely due to reduced operating expenses, which decreased from $22.2 million to $21.5 million, thanks to lower compensation and benefits costs.
EPS forecast and analyst expectations. Now let's talk about earnings per share. Analysts had forecasted an EPS of -17 cents, but TELA Bio reported an adjusted EPS of 19 cents. John, what does this tell us?
This indicates a slight miss from the forecast by 2 cents. While the company has made strides in reducing losses, the EPS miss suggests there are still challenges to address, particularly in managing costs and improving operational efficiencies.
Strategic initiatives and future outlook. Moving on to strategic initiatives. TELA Bio has secured a new credit facility and revised its revenue guidance. Can you elaborate on these developments?
Absolutely. TELA Bio has strengthened its capital position with a $70 million credit facility from Perceptive advisors. This move provides financial flexibility to support their growth initiatives. Additionally, they've revised their full-year revenue guidance to at least 16% growth over 2024, reflecting confidence in their strategic direction.
They've also made some changes to their leadership and sales teams. How might these impact their future performance?
The expansion of the board with new appointments and the accelerated hiring in the U.S. sales organization are strategic moves to bolster their market presence and drive sales growth. These changes are expected to lay a strong foundation for re-accelerating growth in 2026.
Key takeaways. In summary, TELA Bio has shown promising revenue growth and strategic initiatives despite a slight miss on EPS expectations. John, what are your final thoughts on TELA Bio's investment prospects?
Overall, TELA Bio is making significant strides in strengthening its financial and operational position. The new credit facility and strategic hires are positive indicators for future growth. Investors should keep an eye on how these initiatives translate into financial performance in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on TELA Bio's performance in the comments below.